I'm here today with Rick Van Nieuwenhuyse of Highfly Nova Gold Resources. Rick, how are you today?
Good to be back and good to talk to you again.
Good to talk to you too. First off, Rick, Nova Gold's share price has dramatically outperformed North America's major market indices in 2010. Your share price has been up as much as 189% since the summer. So what's propelling this parabolic rise?
Well, I think it's a number of things coming together. Obviously, gold and copper prices have risen dramatically here in the last, of course, the last year here. I think probably more fundamentally, our major projects are meeting major milestones, and our partners are talking about our projects. And that's giving a lot of confidence to the market that these projects are moving forward.
Okay. For investors who want exposure to gold's rising trend, do shares in Nova Gold still represent good upside value when compared to the alternative of owning physical gold?
Absolutely. I think that's our that's one of our main market messages, is that if you want leverage to gold, if you want exposure to gold, you can go buy gold and you have a one-to-one leverage. Then you got to worry about storing it and having it secure and all that. You can buy the ETF and you get even less than a one-to-one, because somebody's got to take care of the ETF and manage that. There's a price to that, and you pay it as a person who's buying the ETF. What Nova Gold offers is about a 12-to-1 leverage. So you buy with $1, you get exposure to $12 worth of gold, and you get exposure to $12 worth of other metals, copper and silver. So you're getting huge leverage when you're investing in Nova Gold, and that leverage will continue no matter what the gold price is. Just remember, leverage works both ways. When the gold price goes down, you move down. When the gold price moves up, it moves up. If you want exposure to gold and you believe that gold's in a bull market, like a lot of people, including George Soros, then I think Nova Gold's a good bet.
Nova Gold's claim to fame is its 50% ownership in two of the world's by far largest in-development gold deposits. Now, where are these deposits and what makes them so special?
Well, our Donlin Creek project is in Alaska. It is truly one of the largest undeveloped gold deposits in the world. It had 40 million ounces of reserves and resources, and that number keeps growing. The Galore Creek project is in northern British Columbia, and it's a copper, gold, silver project, but it has a lot of gold contained in it. So you're located in safe geopolitical parts of the world. Alaska and BC are mining-oriented. State of Alaska and the province of BC are very mining-oriented. Lots of mining activity going on, so it's not like it's not been done here before. There's a good permitting regime. I'd say it's a rigorous permitting regime, but it's very doable and it's very prescriptive. And once you enter the permitting process, I think you have guaranteed a good outcome.
Okay.
If you do things right, of course.
Okay. What are the benefits of having major mining companies as partners in the development of these prolifically sized deposits, and who are they?
Well, on Donlin Creek, again, when you're dealing with one of the largest gold deposits in the world, it's nice having Barrick Gold as your partner, and who are, of course, the largest gold mining company in the world. They bring a huge amount of bench strength to the project. They operate 28 mines worldwide. They understand permitting very well in North America. They've been operating in Nevada for years, so they understand the U.S. permitting regime specifically. They are experts in mining. They're experts in processing. The ore at Donlin Creek is let's call it refractory ore. The gold's contained in sulfides. Barrick is one of the world's leaders in operating processing facilities for this nature of ore. Similarly, here in British Columbia, our Galore Creek project with Teck as our partner. Teck's the largest Canadian diversified company. They operate a number of mines in copper and coal. And lead zinc, of course, around the world. Again, very strong in Alaska. Red Dog is the largest zinc deposit in the world. It's located in Alaska. Teck's the operator there. They've been working there for 25 years or more at Red Dog. So they have a lot of operating experience. Similar here in BC, Teck operates the Highland Valley mine, prolific copper mine that's been in production, I think, for about 40 years. So a lot of experience that we get the benefit of as being a 50-50 partner with these major companies.
Okay. You have plenty of copper and silver at Galore Creek. What will these byproducts do to bring down your production cash costs?
Yeah, the nice thing about Galore is a multi-metal deposit. It's a huge deposit. It's 1 billion tons of copper, gold, and silver. There's a significant amount of gold, of course, 10 million ounces, which makes it qualifies as, certainly among the larger of the development stage projects out there. The copper and the silver as byproduct credits, the way you account for the byproduct credits is basically to take what the cost of producing an ounce of gold is and then subtract the benefit of producing byproduct copper and silver. And that's a standard methodology used by the mining industry. So in today's market, you would be producing an ounce of gold at a very large negative cash cost, taking the production of silver, which on an annual basis we're estimating is going to be between 3 and 5 million ounces of silver annually, and 300 to 400 million pounds of copper annually. So see, with silver selling above $25 an ounce and copper selling well above $3 a pound, you can see there's huge byproduct credits that come to the accounting side of the equation, and therefore allowing you to produce gold at a very high negative cash cost.
Okay.
Or a very, very low cash cost.
I see. Rick, what will be the key value drivers for your share price in 2011?
Well, 2011 is going to be a great year for news flow because we'll have an updated feasibility study on our Donlin Creek project. We've decided to use gas as a source of power there. We think that will lower our operating costs and be an overall benefit for the project on a net present value basis. So that's a big event. We'll also be initiating the permitting process next year on Donlin Creek. So those are two big, huge value drivers on Donlin. On Galore, similarly, we'll have a pre-feasibility level study that'll be coming out in Q2 of next year. And an announcement we expect based on our current view of the markets. We expect then to be able to go forward with a feasibility study, funding a feasibility study, in entering the permitting process in the British Columbia regime for permitting Galore, and then also finish the construction of the road access into Galore. Additionally, the province is separately on its own is anticipating building the power line along Highway 37, which will provide power for the Galore Creek project. So all those will be, I think, huge value drivers for the company next year.
Okay. When do you envision these two mines being commercialized, and once that takes place, what will your production profile look like?
That's a great question. These are big projects, so they're going to take some time to permit and to build. Our timeline for Galore, which I'll mention first because it's really the first one up, we expect the next phase of completing the feasibility, completing the permitting process, and completing the road to be a 2-year process. So by 2013, we should be able to be in a position to make a decision to construct the mine. Probably about 3 years, 3 to 3.5 years to construct the mine and milling facility, tailings facility. So 2016, you should be looking at production. On Donlin Creek, similar process, but it'll be about 2 years behind that.
Okay. So when these mines are in production, what kind of output are you looking at?
Combined on our 50% share of both of these big, huge mines, we will expect to produce on the order of 1 million ounces of gold a year. And because of the byproduct credits of copper and silver that we mentioned, will be a very, very low cash cost producer and perhaps even negative cash costs if the prices of silver and copper maintain current levels.
Okay. So when do you believe you'll become a cash flow positive company?
Oh, probably a couple of 2-3 years. I mean, again, it'll depend on metal prices, but certainly at today's metal prices, it would only take a couple of years to pay off each of these big mines. So within 3-4 years of production, we should be cash flow positive.
Okay. Finally, Rick, gold has gone from around $252 an ounce in 2002 to over $1,400 an ounce 8 years later. Do you think gold's momentum has any more running room, and if so, why is that?
Well, we've certainly seen a huge movement in gold and a huge movement in copper and silver. We don't think the move is over. We see huge demand. If you just look at the supply demand dynamics, we have decreasing supply from mining operations. It's taking longer for the whole process of discovery through production to take place for a whole variety of reasons. Permitting takes longer. the level of due diligence, the level of engineering studies, environmental studies, social interactions. All that is taking more time than it used to. If you looked back at the industry 20 years ago, we used to do this in a couple of years. Now it's taking 5 to 10 years to bring a new mine into production. That's just the cold hard facts of reality of operating today. Whether it's if you're working in North America, the permitting regime is very strict and very stepwise, and you have to follow that procedure, and it can take 2 to 3 years to go through that process. If you're working in Mongolia, the permitting process itself may be simpler and more straightforward, but you have a negotiation with the government as to what percentage of the benefits the government is going to get. So that doesn't happen overnight. It takes several years, as a number of big projects there have found. So bottom line is it's taking longer to develop these big projects, and I think because of that, the supply side will remain restricted. Meanwhile, we see huge demand continuing out of, particularly out of Asia, for not only copper but also for gold. Both India and Asia traditionally love gold, and so we think we'll see a continued appreciation of desire for gold as those two countries specifically develop more of a middle class.
Okay.
And of course, here in the West, we're having economic troubles right now in North America and Europe, but those will get resolved. I mean, it may take 2 or 3 years, but we see nothing but positive future there in terms of how much copper, say, that North America will consume.
So is $2,000 an ounce gold a conceivable scenario down the road?
Excuse me, we certainly, I don't think that's an unrealistic number. We're not doing our planning based on that. We're using conservative planning strategy. $1,000 gold will be the price we'll use for our planning going forward on our gold projects, and probably, again, a very conservative number on copper, probably $2 to maybe $2.25, $2.50 would probably be the upper side of the range that we would look at from a planning standpoint.
Okay. Are there any other key points that we haven't covered that you believe are worth mentioning?
No, I think, we covered the leverage thing is part of the story that I always love to tell people. We're explorers at heart. As I said, company, that's what we've been very successful on is discovering gold and discovering copper and silver, and we'll continue doing that. We've got some new projects that we're working on now. It's early stages, but we've been successful in the past, and I think we'll continue to grow our resources and reserve base, and providing increased leverage for our shareholders.
Okay. Rick, NovaGold Resources certainly is a very dynamic stock, so I wish you continued success.
Thanks very much. Good to see you.
Thank you.